Hey everybody, it's Aaron Norris with the Norris Group. It is Friday, November 18th, and what are some of the biggest trends you expect to see in 2017? That and much more as we cover the biggest headlines in real estate. We continue with I Survive Real Estate on our radio show this week, and this segment you're going to hear Doug Duncan, John Burns, Sean O'Toole, Gary Costa, and Nick Bailey discussing everything from demographic shifts to workforce participation and the open door policy and what it means for real estate. Don't want to miss that on the podcast and radio show coming up Saturday. The latest Wells Fargo housing market and National Association of Home Builders report showed a decrease in confidence for the housing market by 2 points in October. The NAHB also reported home builder sentiment is at 63, up slightly from last month. Mortgage rates increased after the election, with 30-year rates now at 3.94% and 15-year rates at 3.14%. We'll see if they stick. New home construction increased last month to its highest in 9 years, now standing at 1.32 million. But building starts are, while there's up 25.5%, permits, on the other hand, are down. And those are a predictor, of course, of construction to come. And we want to see those growing just as quickly. So we'll have to see if that improves after the election and into 2017. Despite the Chinese government trying to put the kibosh on capital outflow from China, Chinese investors are just loving out of country real estate since the yuan is starting to slump, and markets like Shenzhen, Beijing, and Shanghai have just exploded. So they're looking for other real estate. Typically, they go to places like Sydney, Vancouver, Hong Kong, and London. Well, those have got really hot, and there's new regulations in place in some of those markets that also make foreign investors not want to invest there because it's more costly. So where are they headed? Places like Houston, Orlando, and Seattle. So we'll have to see if that continues next year. San Francisco's Board of Supervisors just put the smackdown on Airbnb this week. Landlords are now limited to being able to have their homes rented only 2 months out of every year. Many blame sites like VRBO and Airbnb for the housing crunch in the Bay Area. Affordability is a real issue. Many landlords are not registered and paying property taxes, which has been part of the issue, and Airbnb hasn't necessarily been playing nice this entire time. So the government now has Airbnb's attention. Will the mayor overturn the ruling, or will Airbnb and the city government go back to the table to fix things? Because that would be a big hit. If I bought a rental in San Francisco and thought I was going to be able to rent it out 12 months out of the year and it's the 2, those numbers are very different. So we'll have to wait and see what happens, maybe hopefully by the end of the year. Some economists are predicting increased inflation due to a Trump presidency and his pro-growth policy. So if that causes interest rates to increase like they did this week even more, that could cause softening in some real estate markets like LA, Orange County, San Diego, and the Bay Area, where prices are sort of headed to their payment and price peaks of the crash. And in the case of San Francisco, they've already blown through that. So some think that that's going to force builders to really take a look at the kind of inventory they're building, as maybe buyers are going to start focusing on smaller and more affordable units. They'll take the lead on that, so we should be able to see that in the next couple of years. But I think many of us are very excited to see what this new administration is going to cause for the housing market, and we're just not going to know until after January. Freddie Mac research shows renters are more concerned about utility cost increases rather than rent increases, which is interesting. A high percentage also said multifamily properties that offer green and water-saving features would help save them money and are likely a better place to live. I know as I'm upgrading my rentals, I'm always looking at things to do like LED lighting so I don't have to replace them. I'm upgrading the sprinkler systems and high-efficiency toilets, and anything I can do that's efficient I put in there, but I haven't thought about marketing it directly like that. So it's interesting to hear if some of you have been doing that and if it's rented faster. MarketWatch has an article on the 5 trends to watch out for 2017 when it comes to real estate. Number 1 is drones. We've all seen the vomit-inducing shots overhead of properties and expect more of that moving into 2017. I haven't bought one yet, but I'll think about it. Number 2 is suburban. You might have heard that term if you watched I Survive Real Estate. The panelist John Burns, he wrote a book about demographics and some shifting trends, and he talked about the suburban lifestyle, so the best of urban and the best of suburban put together, making a work, live, play kind of environment. Let's see if builders sort of attack that and what kind of inventory they're developing. They'll probably take the charge there, and whether urban developers and cities like it and start making room for it in their cities. Number 3, those darn millennials. Forget about the starter homes. They're going straight for the move-up market. And that's interesting because, we've heard a lot about, all this education expenses and they just can't save up enough for a down payment. Well, according to the National Association of Realtors, that might not be the case. So we'll see if millennials jump in and at a higher level than we were expecting. Number 4, Trump could mean less regulation and more certainty to the real estate market. But as I mentioned before, he might also bring inflation and higher interest rates. So verdict's out on that. I'm not sure what the trend is there, but that's what they reported. And number 5, Gen Z, also known as the We generation, they will just be turning 18 in 2017. And apparently 97% of them want to own a home. Maybe they'll end up picking up the inventory that those darn millennials aren't going to suck up. Who knows? Maybe they'll move into home ownership a little bit sooner. So what are some of the biggest trends you're expecting for 2017? If you're on YouTube, please leave a comment below and don't forget to like the video and subscribe to the channel so you don't miss a beat. If you're on Facebook, please don't forget to not only like the Norris Group page, but don't forget to add us to your See First list and with notifications on. Leave your comments below the video. And if we missed something, share the story on our comment sections on either YouTube or Facebook and we'll make sure to include it on our blog at thenorrisgroup.com/blog. We are back on the speaking circuit in December. December 13th, we'll be at SDCIA doing our brand new talk, 10 Life-Changing Days of a Real Estate Investor. This autobiographical look looks into Bruce's career for 35 years and some of the biggest things he's learned and how it applies to your career. And of course, February 4th, 2% interest rates, $30 trillion in debt, and other surprise ending. That is our annual report that we do. I guess it's not an annual report. We only do a timing report every few years or so, and this is going to be a big one. This is going to be looking at trends out 8 to 10 years. Information on that is coming on our website. Just mark your calendars. You'll hear more about it in the coming weeks. For more information on hard money loans, including fix and flip, buy and hold, and new construction with rates starting at only 6.9%, check out thenorrisgroup.com. We would love to do a hard money loan with you. And if you want more information on passive investing with the Norris Group via trust deeds, check out tngtrustdeeds.com. With that, have a fantastic weekend, and we'll see you next week.